In this scene, Michael Douglas's character, Gordon Gekko, gives a speech at a shareholders meeting. The characters include Gekko as the speaker and his fellow shareholders as his audience. The context involves Teldar as a target of a hostile takeover by shareholders led by Gekko. As the company's largest shareholder, Gekko gives a rousing speech at a shareholders meeting on how the perceived incompetence of management has led to declining profitability. Gekko risks being perceived as a corporate raider who is out for self if his words are misinterpreted. The reward is unbelievable financial gain. If his push to replace management works, the company's new executives may decide to sell the company's assets off as components. This move could net Gekko extraordinary profits if the sales of each asset exceeds the value of the company. Key points to note. Number 1. Skin in the game. The phrase skin in the game often denotes the level of equity and commitment one has invested in an asset. Gekko links positive connections with historical businessmen and the stakes in the companies they managed. Andrew Carnegie of the Carnegie Steel Company and Andrew Mellon of the Mellon National Bank are examples of note. The painting of this historical picture is used by Gekko as a juxtaposition to Teldar's declining success. His theory is that the management team's collective stake of less than 3% is central to their lack of Teldar's decline. Number 2. Incompetence. A lack of leadership and accountability are often seen as measures of overall incompetence. Gekko emphasizes a lack of accountability by outlining the company's previous year loss of $110 million. The loss is implied to be as a result of waste and excess by the company's 33 vice presidents, each garnering more than $200,000 a year. Number 3. Qualification. There is a perception that the person who should lead a mission is the one who is most qualified. But in business, a captivating problem solver seems to be the type of person who often assume power. Gekko has both characteristics. His last 7 deals quantify his problem-solving ability for 2.5 million stockholders by earning them a pre-tax profit of $12 billion. His ability to captivate an audience is almost godlike. In the case of Teldar, he does this by positioning himself as a liberator of companies who lead shareholders to profits, like Moses leading the Israelites to the Promised Land. So what's the takeaway? Greed is good.